Hi, Tamal. Thanks for coming on the show.
Thank you.
It's great to have you on the day the meeting minutes are announced. The RBI announced a 50 basis point hike, but the policy guidance also hinted at a 6.7% inflation and other risks emanating from unhinging of inflationary expectations. Now, this is very much in line with the column you wrote just a few days before the policy, where you highlighted a 50 to 40 basis point hike, unchanged growth, and inflation at 6.5%, if I'm not mistaken. Do you think we'll stop at the pre-pandemic level of 5.15% or cross it in the next meeting itself?
No, definitely not. I would like to believe the way it's been drafted, his statement, he would not. I would expect another 50 basis point hike in the next policy in August. Yet another in September, which actually planned to be in October, but has been advanced to the last week of September. So I would like to believe we need to reach definitely 5.15 is not the destination. And if you had been at the Reserve Bank of India Governor's post-policy media conference, he did mention that we are our current rate is lower than the pre-pandemic level, yes, and current liquidity is higher than the pre-pandemic level. So while 5.15% rate is sort of could be the immediate goal, which we thought earlier, but now one full percentage point raise and the inflation focused. So when you have 6.7% inflation, which yes, is 70 basis points higher than your upper band, mm-hmm, and also governor said the first 3 quarters it will not come down. Okay, yes, it will come down to around 6 only in the 4th quarter.
Yes.
So I would like to believe the pause happens after a series of rate hikes, which already started. 2 of them happened last month and today. Another 2 to 3 hikes. So definitely in August and September, probably even in December before it takes a pause. Now, what would be the pause point? Is it 5.5 or 5.75? I don't know, because it's an evolving situation. There are many ifs and buts. It's a very fluid situation. But one thing is for sure, that RBI has changed the script. It has fallen in line with the global central bank. But now it's a familiar central bank script. Inflation is enemy number 1. You have to fight inflation. And the only way to do this is hiking rates, and which is started. It's a second in the series. I would expect another 2 to 3 hikes by December. So around 5.5, and ultimately we may go to 6 and above, depending on how the situation unfolds.
It's interesting that you mentioned that, because there was a term called globalization of inflation that was mentioned in his remarks. Now, and talking about liquidity, because there was no CRR hike this time around. Can we expect one next time, or is the liquidity being managed without the CRR hike? And what do you make of the governor's statement in that regard?
So it's a little technical part. I'm afraid I'll try to make it as simple as possible. In the new liquidity framework, which is about 2-year old, it talks about, it's now it's a 50 basis point corridor. Within that corridor, policy rate is at the middle, and then you have MSF at the top end, and the new instrument which has replaced reverse repo at the bottom end. Yes. Right? So now the policy rate is 4.9 with the latest report is 4.9. Yes. So which means 4.65 is the lower end of the corridor and 5.15 is the upper end of the corridor.
Yes.
But if you see the weighted average of call money rate, it should be at middle somewhere. So it has to go up. Now, will we see another round of CRR hike? Because last month it had sucked out 87,000 crore by raising 50 basis point. I think we need to wait and watch, because how much is the government spending? So there are many variables how the liquidity, excess liquidity pans out. So we need to watch, but I'll not rule out. If I see that liquidity, I mean, if the government's there's a leakage, and then the government spending huge, then again liquidity may come back. So it all depends on and how much Reserve Bank of India active in the foreign exchange market and how it does. Because if it is selling dollar, then
Yeah.
to that extent, rupee is sucked out.
Yes.
Liquidity is drying. But
Yeah.
if it sells dollars in the forward, then will not have any immediate impact on the rupee liquidity.
Exactly.
So there are many variables. At this point of time, liquidity is coming down, but still there is adequate liquidity, plenty of liquidity, which is why I would say it's not even though the word accommodation is not anymore, it's withdrawal of accommodation, that is the
Yes.
stance. But you look at the liquidity scenario, it's not even neutral policy. We need more liquidity to be drained. And let's wait and watch how it happens, how it pans out.
Now, within this paradigm, I would like to take you back to the topic of appropriate and adequate liquidity, which you discussed in your bankers trust this week. Does the current policy change your assumption about RBI graduating towards appropriate liquidity or not?
No, that word is not there. This term actually Dr. Reddy used to use as a governor. And it's a very nuanced central banking language. There is a difference between ample and adequate and appropriate. But the governor's statement and the MPC has been continuously harping on adequate liquidity, of course, with a caveat for the productive purpose, because it does not want to harm the growth and the credit of tech.
Yes.
But I would like to believe it's time to talk about appropriate liquidity, because there is the fine difference between adequate liquidity and appropriate liquidity. We continue to have adequate liquidity, which is why I would say that even though the focus is on withdrawal of accommodation, I will not call it even neutral. Liquidity does not say that even is a neutral stance. Forget tightening.
Got a point. Now, one of the points that I found very odd was that in overplaying of economic resilience, is RBI falling into the same fallacy again as it did earlier? Because comparisons were made to the emerging markets and how India has shown resilience. What do you think about that?
RBI 7.2% just remain unchanged, and I think it is achievable, doable, unless things are dramatically turn worse. And at 7.2, we are far better off than many other countries. But the point is, your question is it sustainable? We are getting into a trap. If you look at today's policy, governor is more confident on the growth part, but huge concern on the inflation, which is why priority is very, very different. Will we change growth estimate downward? We need to see, because apart from everything else, the higher interest rate has an impact over the demand, because 40% of the credit now is the external benchmark linked. And this external benchmark is either repo or 364-day treasury bill. Now they are rising. So, and all the MSME loans, all retail loans from 2009 December onwards have been linked to, and the banks are very fast in passing on, so which means your mortgage loan or your auto loan has gone up by 40 plus 50, 90 basis point, and it will go up by another 75 basis point odd in the next few months. So will that create instability? Even I'm talking about financial sector stability, because this will hurt the MSME segment. This will hurt the retail segment. So it will hurt banks' balance sheets, and of course it will impact demand. So it will have an impact on growth. Now, will RBI take a relook and bring it down? I think we need to wait how it pans out. Probably not in. I'm not expecting it to do it in August or even in September, but probably in December we will get to see, because there's always a lag effect.
Thank you. Thanks a lot for talking to us today. We hope to have you back again soon. Thank you.
Thanks. Thank you.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue, of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.